Hello and welcome to Avion Insight Africa, the podcast offering a window to the world of African aviation with your host, John Howell, CEO and founder of Avion Africa. Today, we're going to explore a solution that is growing in importance in Africa. We discussed it last year, and so we reconvened to understand what progress has been made since our discussions last year and whether the offering is still a good fit for the African market. Specifically, we're going to focus on ACMI, an acronym meaning Aircraft Crew Maintenance and Insurance, which is a form of leasing. And to do this, I'm joined by an expert in the field, who is Dainius Staniulis, who was with us last year, who is the Vice President of Commercial and Business Development at Avion Express, a provider of short and long-term leasing and charter solutions based in Lithuania. Dainius, welcome back to the podcast.
Thank you, John, and it's a pleasure of joining you for the second year in a row. And I hope we can share more knowledge and experience on ACMI and then the solutions that we're offering.
Yeah, great. I'm really excited to have you back on the podcast because I think last year we were really in that understanding element of trying to explain what ACMI is. And ACMI isn't a brand new concept globally. It's not a brand new concept from an African market either, but it's become really sharply into focus in a post-COVID world. So can you give us a little bit of a overview as to what ACMI is to the layman, and also then dive in a little bit into what have been the traditional means of owning, operating an aircraft in Africa up to this point?
Sure. So ACMI, as I mentioned previously, it's an acronym of Aircraft Crew Maintenance and Insurance, or quite often it is referred to as wet lease or damp lease. So wet lease is with full crew, and damp lease is with cockpit crew from our side accordingly. It's been in the market in Europe for many years, and it's been growing as a solution in Africa recently as well. The more traditional means are, of course, owning the aircraft and or dry leasing it from the lessors, and this is the way the airlines usually operate. However, we see a large trend in Europe that ACMI is used as or included in the strategy of an airline and used as a strategic tool to plan your fleet going forward and to plan your capacity fluctuations going forward. And I think this is where the African market is also developing, and it has very huge potential to develop to. And the reason for doing so, comparing to dry lease or owning the unit, is that usually there is seasonality in the market, either a large one as in Europe, or smaller peaks within certain periods where flexible solutions can be used instead of owning or dry leasing an aircraft for a very long period. And ACMI is by all means a tool to be utilized in order to drive your costs down and increase your profitability, especially in your peak seasons.
Yeah, I think, people who are aware of the industry, they'll know that and it's been chronicled that obviously a lot of airlines, state-owned airlines, they've bought the aircraft or they financed the aircraft themselves. Other airlines are big into leasing these. But how big is the ACMI market? I mean, what are we talking percentage-wise, roughly? Is it super small still with loads of scope, and how does that compare to other parts of the world?
I think Africa is a big continent, so it very much depends on the region or particular countries, in fact. So historically, the market has been quite big in Northern Africa, for example, within countries like Morocco, Tunisia, and surrounding countries as well, using ACMI solutions, especially in the European summer season, which is also the high season for them. Quite recently, now, if we go towards Central Africa, Nigeria is really the country which understands, I think now at this point in time, and uses a lot of wet lease solutions as well. So the market is really growing there in general in terms of passengers, in terms of capacity requirements, and ACMI is also being used as a solution over there. And we also have some other markets which are really counter-cyclical to Europe in Africa, such as South Africa, for example, where really the same capacity, the same aircraft can be used after the European high season as well. So I think, we mentioned different regions in Africa, and this basically shows that there are more and more countries and regions within Africa utilizing this tool, and airlines actually benefiting from the tool. And I think there is, with the growing passenger demand and growing markets within Africa, there's plenty of markets still to tap to.
Yeah, I think the counter-cyclical thing, we talked about that and focused in hugely on that last year to say, especially with the sub-Saharan market, that is summertime when it's wintertime. And what you're doing with these solutions often is coping with that fluctuating demand, but also that peak demand, which you can still predict. So it's not fluctuating, you can see it coming, but you just don't have the ability, you don't have the fleet to be able to cope. So I'm assuming you've got things like obviously the Hajj and the Umrah with the Muslim population wanting to travel. So is that driving a lot of the ACMI demand in, say, a Nigerian market? Is that a lot of it's for those purposes?
Partially, yes, but then this relates to wide body capacity more, I would say, compared to the narrow body capacity and narrow body fleet, which we are offering. Now, on the narrow body side, there are different things that can affect the demand. One thing is that you can plan is the peaks that you have in the market you are operating in. So either be it November till end of March or April, or be it just for 1 or 2 months, but you know that the passenger demand is good, and this is something that you can plan on, and you don't need to dry lease an aircraft for a 12-month period to cover these 2 months of peak capacity. And this is somewhere where we can step in and assist the airlines to earn the profits which are out there in the market within the peak seasons. Then again, you have airlines operating smaller aircraft, regional jets, which would like to expand as well and would like to offer larger capacity to the market. And this is somewhere where we can help them to try out this model, to try out bigger aircraft, and then see if it works for them. New routes is something that can be tested using our capacity as well, and also of course in these days a very hot topic is late aircraft deliveries, late deliveries from the MROs due to supply chain issues, and also crew shortage. And this is also a few reasons why airlines use our support as well.
Yeah, because I think we talked about this last year, that often it would be with an aircraft on the ground sort of situation was traditionally why this solution came in. And it's almost like, if your car's in the garage, you get a courtesy car while it's being worked on. But of course, that model's expanded into all those things you talked about. The thing that's most exciting for me is, of course, that new route testing side of things. So an airline that's done the homework and thinks, do you know what, I think we could deploy a larger gauge aircraft on this route. Let's try it. Let's get an ACMI rather than let's go full, 2 feet in and lease an aircraft for those 2 months and then wonder what to do with it for the next 10 months. This is an opportunity to kind of plug and play. So let's dive in with Avion Express. Your fleet, I've got one just here on if anybody's watching, but is it sole A320 fleet that you're operating at Avion?
I would call it A320 family, but actually the majority of the fleet is A320 aircraft. So by summer season 2023 in Europe, we will have around 55 units in our fleet. Almost all of them A320s, just a couple of A321s. And all of the aircraft are in full economy configuration. Of course, we can adapt it based on the customer needs and depending on the term of the project. So we are concentrating on the single type of aircraft, concentrating on what we know and leveraging on the knowledge and the experience that we have in the market, which now is 18 years. I think it was February when Avion Express turned 18.
Yeah, amazing. And that the beauty of having the same family is that the ability then for everybody to be able to jump in where required. You know, it's the same sort of fleet across the board. That's the thinking behind having that aircraft type?
Correct. We basically flexibility is one of our core values of the company, and having the same type allows us to be flexible towards the market, towards our employees internally in the office, and the crew members can also be more flexible. This is true, and also then you benefit cost-wise on the maintenance side. Again, it's less diversification in terms of what you need to cover and know, etc. So I think concentrating on the same type is the route to follow, at least from our perspective.
Yeah, makes sense. So diving a little bit deeper into this, we talked about those peak periods and that capacity. Is there a minimum period if there's an airline listening and they think, oh, I've got something that I know is seasonal, is a peak in demand? Is there a minimum period that they have to commit to when wet leasing from Avion?
To answer the question from a broader perspective, so I would say, since we have this largest seasonality in the world in Europe, which starts in April and ends by the end of October each year, so most of our aircraft, they fly in Europe during that period, but by any means we are limited to Europe, as we have aircraft operating in other regions of the world all year round. So we're also open on full year operations within Africa, but usually due to high demand, the capacity for the summer season in Europe is booked quite in advance. And then probably the willingness during that period is to think about longer term projects, meaning if we usually have agreements for 5 or 6 months during the summer season. Now, in winter season, anything that would allow the customer to benefit from ACMI is acceptable for us. Of course, then you need to calculate in the ferry flight costs if it's worth for a week of operations to do that. But all in all, we are ready to be flexible, be it 1 month of operations or 3 or 4.
No, great. Okay, thanks for clearing that up. And of course, in the same way, using that analogy of hiring a car versus buying a car versus leasing a car over 5 years, you would expect to pay a premium for the flexibility that the solution offers. So the question that a lot of people do ask is, can an airline be profitable with this type of operation? And I'm guessing what you're going to say is that obviously, being sole ACMI can work even if you're just the seasonal ACMI operator. But tell us sort of how that works, and is it possible?
So from the customer perspective, which are other airlines, be it scheduled or charter airlines, experience shows that it is a feasible solution, and we've done some studies on the financials of publicly listed airlines as well. And if you have a case where basically you end up probably being profitable on 3 or 4 months during the year, but you lease or you pay the fixed rent of the aircraft throughout the year, then the cost of ACMI has to be calculated in using or having in mind all year operations as an alternative. You cannot just take the ACMI price per block hour and compare it to your own cost, because it's probably not the exact comparison. And because if you operate the aircraft or you don't operate the aircraft for which you actually pay the rent, then it brings a loss to you throughout unprofitable months, and this is something that needs to be taken into the calculations. So when you do that, then ACMI becomes a profitable solution, and it makes sense. The amount that can be saved by an airline is actually quite substantial, and this is something that we're trying to imply not only to the fleet people who we talk to, but also to the CFOs, which are following the numbers really in depth. And when you start talking about saving millions, then it makes sense.
Yeah, I think it's efficiency and it's utilization. They're the two words that I would sort of bring out of what you've said, which is, making sure that the aircraft you have are being used to the right, to the right levels. And obviously they are only being deployed and being brought in when required. So like you say, you're not paying for them to sit around because you brought them in for a specific purpose. If it's done the right way, then it can be profitable. You have to do your homework first to make sure that you're bringing in that capacity when it's required. If you bring in the ACMI capacity and you've overcooked it and you didn't need it, then it's obviously going to be difficult. But I agree with you in terms of comparing block hours. That's not fair because, of course, it's a different solution. And I think in the world we live in now, having that flexibility and that ability to test new markets and try new markets is going to be, really valuable. So a lot of the things we've talked about today is actually covered by a little blog post that Dainius and the team at Avion have put together. So that's in the show notes. Dainius and the team will be with us in Aviadev in Nairobi in June as well. So you didn't make it to Cape Town last year, Dainius, because I think you were moving house. But we are going to see you obviously in Nairobi this June. So give us a little bit. Are you excited to be with us for Aviadev this year?
Oh yes, I am, John, and I was sad I couldn't make it last year to Cape Town, but I've heard good feedback on the conference, and I think people were happy, and some good communication exchange of ideas happened over there. And I'm thrilled to be a part of Aviadev this year, and I hope nothing comes into my way to travel to Kenya and to meet everyone there.
Absolutely. We can't wait to have you there as well. So what I'll do is I'll put a link to Dainius's LinkedIn profile in the show notes so you can access and send him a connection request there. You can also download the blog post as well from the show notes too. And of course, you'll get to meet Dainius in person in June. But if you can't wait till then reach out to him through those means and have a good read and, get yourself up to speed with the ACMI solution, because it's really exciting. It's something not necessarily brand new, but has become really sharply into focus over the last couple of years as we're all looking at different models of operation and, less of a structured seasonality, but definitely more fluctuation. And fluctuation means adaptability, and adaptability is where ACMI comes in to allow you those options to obviously flex as you develop. So, Dainius, thank you so much for joining us today. It was a real pleasure.
Thank you, John. To add to what you were saying as well, I think the COVID era taught airlines to be as flexible as they can, and even for a longer term period to use ACMI, let's say for a 12-month period, it's still more flexible than having a dry lease aircraft for 6 years. So, and at times as COVID or similar, flexibility comes in handy. So this is probably an addition to the other reasons what we discussed before. And I can only encourage the airlines to think about it, do the homework. We are there to answer any questions, to support with our knowledge and advice from the wet lessor side, and to provide any quotes if the customer is interested. And at the same time, we are open to direct calls or meetings with everyone to try to facilitate a discussion on ACMI and see if we can reach common ground in terms of cooperation. So And then thanks to you as well for inviting us to be a part of the podcast and the conference for the second year in a row. And I hope this continues going forward.
Yeah, me too. And I think the other thing which we touched on in the when we previously spoke, which I think is an important thing to talk about as well. We talked about flexibility, but that comes in terms of how much cash you need to get these operations going. You know, you're not having to have so much capital tied up or to raise so much capital to be able to put this solution in. So again, it's flexible from a cash flow perspective as well, that you're not expected to put up quite so much. And I think that's an important point to be made too, right?
Of course, the cash flow, the capex that you put in when you own or you dry lease the aircraft is much more compared to a wet lease solution. And again, this is something what we're trying to explain within our discussions with the airlines. So actually, you have quite different angles when you discuss it with different stakeholders within the airline. So CFOs have their own agenda on the numbers and the savings that we talked about. The fleet guys, they have their own agenda on ensuring the capacity is there, be it a wet leased or a dry leased or owned aircraft. Then the network guys have their own agenda on maybe expanding the network or reaching out to some destinations which they think they can be of benefit as well. So, you know, there are different angles how to look at different interests within the airline, but all of them have certain angles where actually ACMI is a useful tool.
Yeah, perfect. So as we said, you can get in contact with Dainius through the links in the show notes. Have a read of the blog post. Let us know what you think as well. And obviously, if you enjoyed this podcast or you're listening to it and you think, oh, there's somebody within your organization or within your network that you think would benefit from getting a bit more of an understanding of what's going on with ACMI in Africa, then hit that share button, share it with them in whatever way you want and whichever way is possible. And do subscribe to the show, and we'll be back for the next episode very soon. Thanks all for joining us, and see you again very soon. Thanks. Bye-bye.
Thank you. Bye.